everybody, good morning. Today is Monday, February 5th, 9:03 a.m. Eastern Time. So just let's review the market swap, the gamma and the delta design and compare what we have in the pre-market. So as I highlighted in the market swap, so Friday, no dealers decide to sell, not to buy. It's bearish? No, it's not bearish at all because the DX is still printing above 44%, but they sold. What I have been telling you guys, different than crypto environment, stock market, dealers start to distribute. You guys have been seeing, and I have been showing you guys, not the volatility, but the change of the DX. As soon market reach a buyable region, and soon market reach a delta resistance. You saw what's happened on FONC, right? They sunk the market on FONC, but they sunk to buy. You guys realize it. You guys saw that at the close, the DX jumped from 45% to 49%. And then after the FONC, you guys saw the melt up to a new all-time high, right? And on Friday, as soon market reached all-time high, as we expected, and also as I explained in the pre-market, because a lot of the implied volatility of the call is so high, a normal of 20 points drop before the market open in the future to reach 4,910. That was the buyable region, and then a spike, and that's what exactly happened on Friday, right? Exactly what's happened on Friday. Okay, so they are distribution. Fabio, do you believe in crash? Yes, totally, and I have been showing you guys why, right? I have been showing you guys why. Do you believe that you'll be right now? No, I don't. If crash happens this year, you'll be, for me, near by the end of the year. At the end of the Q2, beginning of the Q3, so I think you'll be a lot of risk to keep positioning in risky assets after the end of Q2. So far, the flow is supportive, and I also have been showing you guys the pivots and the targets. Possibility to go to 5,200, 5,600, and up to 5,700 something, right? I don't want to show the graphic again, to show the pivots, the cup and hand, and blah blah blah. But you guys already know the targets per graph, and flow is still supporting. So we already covered. Dealers sold on Friday, dealers didn't buy, so it's totally normal to see a pullback, right? And I also highlighted over here in the market wrap. This week you will be busy, especially we have big companies report earnings. Caterpillar, McDonald's, techs like Palantir, oil companies like BP, Shell, retail like Lilly, CVS, financial and technology like PayPal. You guys know that I'm long in PayPal, okay? But the results could bring PayPal a little bit more down. That's totally normal. Usually PayPal after earnings, we could see like a 5, 6, 10% up and also 5, 6, 10% down. But PayPal, in my humble analysis, is the most devaluated asset if you compare, especially with the techs, especially the Magnificent 7. PayPal also start to implement, a crypto platform and a stable coin, a PayPal coin, right? And they are the only one that could guarantee a stable coin because they have reserve, they have money, they have dollar. So I believe PayPal is, a good so far investment. We also have Disney. I give you guys a call to buy Disney. You guys remember. I built a structure. I sold 23. No, I sold 94 put, bought 93 call, and use the spread, the money that I received to buy 98 call. I see a possibility that Disney, could you go back to 117 if I'm not wrong? Okay. So it's another report. It's a real economy. Disney sunk more. I don't know in terms of percentage, but went from 220 up to 75, $78. So Disney's already crashed. Anyway, you have big companies reporting earnings. Something that I have been highlighting you guys a lot, and I also have been putting the market structure document. Nowadays, inflation is not more the concern for investors, right? Especially for hedge fund managers, for CTAs. The most important nowadays is the results. It's a good thing, that show us that I'm telling the truth to you guys is the PPI from Europe today, right? Let me open my web browser. So, as I have been saying, the new paradigm to bring markets up to those levels that I cited at the beginning of this morning call, right, is the earnings and not more the inflation, because the inflation was the paradigm of last year, right? So if the paradigms keeping being the inflation, the market's supposed to be skyrocket now today, especially because PPI in Europe came lower than the market expected, right? What's happening with this data? Only the DXY is going up, because this is euro, and the DXI is the how can I say, is the bucket that have all the how can I say, the most important forex, euro, dollar, yen, and etc. So what's happening? Euro went down and dollar went up, moving the DXI, the DXY to going up, basically because the PPI in Europe coming lower than people expected. We have some Fed speaking this week. We start 8 a.m. and then we have Bostek 2 p.m. Those guys usually move the market, but I don't play news. I play just flow structure, okay? But this is the economic data that you have, especially the ISM that is starting 48 minutes that will be released, and the BU actions, that those are not too much important, because it's 3 and 6 months, usually like 10, 20, 30 years is more important, move markets. So those 3 and 6 BU auctions usually doesn't move market too much. But anyway, you guys understand that the paradigm nowadays is not more than inflation, and then company results. Also, we came, better than expected, because it came lower the PPI in Europe, right? So come back to the market wrap. As you guys can see, the CPCE jumped, but the PCSP dropped. Means the 500 companies that are part of the SP 500 index, people is not hedging at all. So that's totally normal to see a pullback, to see call deltas being burned, and consequently bring premium to puts, and then dealers can sell puts to buy cheaper calls. That's the environment. That's what they do. That was different, as I put also in the market web. Here, we are in positive gamma, dips will be absorbed, but I guess it was the difference between the book left on Friday, right? Comparing what they left at the close on Thursday, no, the implied volatility in calls was higher. Than puts. Now was the opposite. So to bring, premium to puts, that's really good to see a pullback. So people start to buy hedge, to buy calls. Dealers start to sell, puts. Dealers start to sell those puts and buy calls that's getting cheaper because the implied volatility is too high. That, that's really different that what you saw on Thursday. The implied volatility on calls was high and then the put implied volatility was lower. What they did, burn call deltas, bring premium to put, people start to buy put, and they start to buy calls cheaper. Market went up, all-time highs. Okay, so that was the difference between Thursday and close at Friday. And consequently, you guys saw that dealers sold because the DIX dropped it from 49 to 46%. They are making price to them to keep distributing and keeping the flow being supportive for the current movement. So what caught our attention 30 minutes before closing was this spread. I also put in the market swap. Somebody looks like that they sold those, Delta 1 calls. That was the Dalbit. I told you guys, they could be sold Friday to buy Monday, but it looks like they sold both, and they set up 4,907, 4,971 as a current major resistance and intermediating top. That's what it looks like because it's going down and puts having higher implied volatility, higher premium, right? I also highlight in the future the intraday graphs left reversal candles, especially the 4 hours. I told you guys that's totally normal for a yes back test 4,949, 4,950. Also, we have a pivot at 4,911. So a pullback is also suggested per intraday graph. Okay. I also highlighted delta support 4,930. At the close on Friday, the gamma support on Friday supposed to be 4,950. Since we close at 4,958 in futures, is suggestions that we close below 4,950. So that gamma, I'm not showing the current gamma. I'm just showing the preview gamma. So according to the preview gamma, 4,950 will be the resistance, right? As soon you break, could you be back to a support? But as I said, this pullback could you be a bear trap just because the higher premium input contracts due to the high implied volatility, different than what we saw at the open on Friday. Okay, so per deltas 4,930 supposed to be buyable, right? Supposed to be buyable. And I also highlighted the Delta 1 order. I expected now a rejection at 4,907 and 71. Of course, with this open below 4,950, the person that sold is already, getting a lot of premium. We could see during the intraday the same play starting to buying back, and then could generate a gamma squeeze to the upside. Okay, hope you guys also understand that. That's how market works. So they put premium, they put profit in his pockets and force markets going up to a gamma squeeze. Especially implied volatility inputs is so higher, force people to buy hedge and squeeze them. Force them again to neutralize deltas, generate a gamma squeeze, and markets is going up again. That's, you know, the structure. Okay, that's the structure. Anyway, so we just review the market structure. So worst case scenario 4,930, that was the delta supported, suggested in the book Left on Friday. So let's get the spreadsheet in the screen and let's see how we have right now. Pay attention in 4,950. Then the gamma that we had in suggested as a support is already gone, right? So to melt markets up now is much more easy. We don't have too much gamma, you know, to, how can I say, to bears defend resistance, right? You guys got it? You guys see how is the setup? Pay attention to the implied volatility puts contract is really high, higher premium. You guys understand, you know, the structure of the market. Okay? Now, market is already set up for a squeeze. Again. Anyway, regarding gamma, we still are in positive gamma, right? Intraday, negative gamma started at 4,950. You guys can see in the graph. Okay? But the delta flow is still supportive. Delta flow is still positive. I like to say delta divergence. So, according to the current, you know, delta flow, instead of 4,930, maybe we can go up to 4,940 only, and will be viable. Consequently, now 4,950 tends to be the inflection point for the upside. We need to look for 4,970 because the orders that I showed you guys before, and the higher delta, you know, flow in those levels. Okay, as soon as you know break 4,950, since we future suggests us to open with a gap down, so 4,970 you became a resistance and 4,950 will become a support. Okay, regarding Bitcoin and cryptocurrency, you guys know that I'm very bullish in cryptocurrency, and I told you guys on Friday that I expect a melt up at least up to 46K on Sunday. But you know, markets, you know, the Bitcoin flow, I mean not the flow, but the graphic pattern looks like that they are dumping up to EMA 20 or EMA 8 in the daily graph, and they are buying back. Okay, and they are selling around 4,300 and going back up to 4,208, 70, 99, and go up to 4,370. So looks like not a distribution, looks like accumulation. Okay. Note, I already said, note, you know, after the PPI, dollars already spiked. I start to get worried as soon the DXY break 104,699. This is the inflection point to the upside. Okay, this is the inflection point to the upside. The TNX, the 10 years yield, now is back testing EMA 50. Could you leave abandon baby, and could you see could you see the TNX, the 10-year yields going back down? Why I'm also looking for this pattern? Because you know the oil is going down. I told you guys a point to short oil, I guess 2 or 3 weeks ago at 80, and the oil went back to 79 something and went down straight. So since you know the oil is going down, is pricing us a recession, is pricing us, you know, a calm down inflation. So this could you be forming abandon baby, the 10 years yield, and you could see the 10 years yield is going down, giving us a buy opportunity at TMF and TLT, you know, basically in bonds. Guys, I finished by here. That's what I'm looking for. So far, worst case scenario for me is 4,940, but per current delta, 4,900, sorry, 30, but the current flow suggests 4,940 as the viable region. Guys, take care.